Hi, welcome to Control and Compound with Darren Mitchell, joined here with Christina, and today we're going to jump right into the monthly update. Hi, Christina, how are you today?
Hey Darren, I am doing awesome. Can't believe we're already into a March update, but here we are, 2 months into 2023, and things seem to be going well. So I'm excited.
Oh, can't wait to figure out what's going on in the economy. Every month, do you think there's going to be a recession? Is there not going to be a recession? Rates going to go up? So what's the latest on the whole recession, global collapse? What do you think's going on as of today?
Yeah, so that recession word we're hearing more and more, right? It's definitely a buzzword happening out there. We're seeing more reports on it. By definition, in order to be in a recession, technically you have two negative quarters of GDP growth. Technically, when we look back at the last quarter of 2022, we actually went up. Now, not by much, like 1.6% or so is what they're saying, but it's not a negative. So technically, we're not in that recession, and it's not. There's a lot of doom and gloom out there, but it's not. It's not looking as bad as what we think, right? When we look at those, we were chatting today about job numbers and spending. There's a credit report that was out that showed people were still spending everything in January, like we haven't stopped spending, which that doesn't show recession numbers.
Yeah, it's I mean, literally, you depends which camp you talk to, but the one underlying thing is the jobs both in Canada and the U.S. The jobs aren't collapsing. In fact, the jobs are increasing. Like Canada added 150,000 jobs last month in January.
Yep.
Like we keep adding the jobs, but all the earmarks of a recession are pointing towards a recession. But the jobs and the real estate, we'll get into a little bit more later, but we really haven't seen what people thought was going to be a big collapse. I think signs are still pointing towards a recession. These interest rate hikes, they sometimes take 12, 18, 24 months to work their way through the system. You are hearing about a lot of the big tech companies laying off thousands of employees, and then was it Nordstrom, the retail store, just announced they're closing every store in Canada, 2,800 jobs. You get some big layoffs at the big tech firms. So on the big companies, we're seeing the layoffs, but the small businesses are still hiring, still looking for people. So until that changes, I don't think we'll see a recession, but I think that could change pretty quickly in a month or two. So fingers crossed, we'll see what happens. Either way, you want to be prepared for if there's a recession or if there isn't a recession. Either way, there's going to be great opportunities.
Absolutely.
And then, Christina, what about interest rates? That's going to be coming up here in another week or so.
Yeah, so here in Canada, we're going to announce, or Bank of Canada has another announcement on March 8th scheduled. A lot of people are saying we're not going to see interest rate hike at that point in time, but a lot of unknowns, right? That's this issue with these recessions and these markets is that a lot of unknowns, and we have that announcement coming up. I'm thinking that it should probably stay flat, but we'll see what happens. Our inflation, if we look at it here in Canada, is actually down to 5.9%. So it is doing what these interest rates were set out to do, I suppose, and looking at the numbers when you're looking at that. But like you said, we don't see full impacts of it right now anyways. It's going to be months down the road before we know what what the interest rate increases are going to look like. So stay tuned for that.
Isn't it amazing that it's a year ago you just matter of factly said, oh, the recession's down to five, or the inflation's down to 5.9%. I mean, 5.9% inflation a year ago, we would have been losing our minds going, oh my God. But you get used to it, right? Now, I don't want to get used to it, but that's it. 5.9 is down from where it was, and it is down from the States. And then what about the stock market?
So stock market we've seen higher returns. I guess we're not negative 20 territory like we were at the end of 2022. We've got some growth there. I think, the TSX and the S&P 500 are up around 4.5% year to date. So it's hanging in, it's hanging in. I can't say it's doing wonderfully, but with all these unknowns happening, people don't like unknowns. The stock market certainly does not like unknowns. That's when we see those big swings, and until we see things settle out, I think we're still just going to be kind of hanging on that side of things. And at a 4.5, we'll take that as hanging on. Although these days the high interest earning accounts are getting 4.5. So it's crazy to look at the difference. You're seeing a lot of people kind of take advantage of that right now, right? Move from the stock market into something where they're getting a guaranteed 4.5%. And really, I can't blame them. Why wouldn't you? With, 1 year's a 1 year lock-in giving you 4.5%, or even daily interest rates now giving you 4.5. Is it worth it to stay? I guess, or to start right this minute with the unknowns that we're seeing in the stock market.
Yeah, I mean, as long as you're in a cashable position, it's better than earning zero. It's not as good as an infinite banking policy, of course, but we all need some cash that is pure liquid. But yeah, I mean, a year ago when interest rates were 1%, I talked to business owners and they'd be like, 1%, I'm sitting on 100 grand, it's $1,000. I'm going to pay half of it in tax. It's $500. It's $40 a month. Seems like it's a lot of work. But now 4 and 5%. I mean, keep in mind, don't kid yourself that 4.5% is a good rate of return when inflation is 5.9%. You're still losing money every month by having it in this 4.5% return. You're just losing less money than you would if you just kept it in the bank account earning zero. But
solid point, Darren. Solid point.
You're still losing, but not losing as much. It's kind of like the financial advisor when the market goes down and, hey, the market was down 22%, but you only lost 15% because I did such a good job with your mutual funds. It's like, okay, hooray. You're still losing money. But what's not losing money, Bitcoin. Bitcoin up significantly, up around $23,000. It was down that 16, 17,000 year end. So we've seen an uptick on Bitcoin. I was actually in Toronto this week, and I met with a couple big Bitcoin believers, and they really think that in the next year and a half, we're going to see a significant increase in Bitcoin. We're not Bitcoin experts. We're not giving investment advice, but it's fun to follow for sure. And then I met with some real estate people in Toronto as well, and it's funny. We keep waiting for that major price drops and the sales, but they're seeing a lot of multiple offers. I think, Christina, I told you I bid on a duplex last month. There were 12 offers, and it went for $65,000 over ask. It was not me, but we're still seeing multiple offers on a lot of properties because the inventory is so low. So there's right now there's more buyers than sellers, so we're not seeing the prices plummet. Now again, all pockets of the country are different. Some regions have seen a bigger drop than others, but in the GTA, like the last couple of months, I think activity is actually increasing. The prices maybe even increasing. So time will tell, but it's certainly not the collapse that a lot of people expected by this point. But it could be like the recession. Maybe it's just delayed, and then when it hits hard. Either way, be prepared, but not seeing the drops in real estate like we thought.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
If we only had that crystal ball. It's all right. I'll take having the savings on this. I'll have my infinite banking so I can take advantage of it when it happens. That works too. It's just as good
Build
as
the war
crystal
chest.
ball, right?
Build the war chest.
Yeah. So news with Control and Compound. So what's going on around here that we want to share with everybody?
Well, we are very excited at Control and Compound. All kinds of cool stuff coming on. We've been asked for this for a while, and we've been meaning to do it for a while, and finally sat down and booked the time off to get it done. But we just launched this week a new webinar that is specifically designed for real estate investors and introducing real estate investors how to use infinite banking, how infinite banking works for real estate investors. And we've got great feedback already. It's only been out a few days. But if you go to controlandcompound.com and then you go into podcast and media section, there's 2 webinars there. The new one is the Real Estate Investors webinar. and that's free to watch. So any real estate investor that wants to learn more about infinite banking, that would be your first stop to learn more. And
Yeah,
then
we'll also
Christina,
throw the link. We'll throw the link down below. Pretty
lovely.
easy,
Thank,
pretty easy find. We'll do that. I'm
thank
sure we
you.
can do
Yeah.
that. Get them to, easy click.
Website. And then we were on a podcast last month that was really cool. We got some good feedback on. Christina, why don't you talk about that?
Yeah, so we went and visited Master Keys. They are real estate agents here in the Halifax area. So Chandler and Neil, we were on their podcast, and it was awesome. It was great talking with those guys. They came over and they did a podcast with us as well. So if you haven't checked it out, definitely do that. And if you're interested in learning more about, the East Coast and what's available for real estate on the East Coast, these guys know their stuff. Like they are I know you've actually been working with them a little bit around here. And they, 100%, like you want to check them out. If it's something that you want to get into, East Coast real estate, they're going to be the ones to talk to.
Yeah, it is so hard to find a real estate or investor focused real estate agent in a lot of pockets of the country. And Neil and Chandler are those guys in Halifax. So listen to the podcast. We get into the rent control. That was really popular section. We talked about a lot of feedback on that. So if anyone's interested in investing in Nova Scotia, listen to that podcast and reach out to the guys at Master Keys. We think they're top notch. And then so that's it for CNC news, Christina.
Yeah, we get to do the industry super exciting news. I'm super excited to share this news. This is a good one. Can I do it? Can I tell everyone? I do.
Let me just do the preamble and then you can do the news. So for years we've been telling people cash value life insurance is an uncorrelated asset. Insurance companies do well in times of the good times and the bad times, boring but effective. 150 years or longer of dividend paid every year, just boring but effective. And then we always talked about 2008. Remember 2008 when everything crashed and then, stock market crashed, real estate crashed, and these pay dividends of 7% in change. And now we have 2022 where we said everything crashed and the dividend went from 6 to 6.1 or up to 6 for a lot of these companies. But now we're in 2023, potentially on the verge of a recession. Everything's worried. You're worried about that. People have so much uncertainty and they're looking for certainty. And that's why they're calling us. Well, what's going on with insurance companies? Christina, how's 2023 looking?
Oh, it's looking pretty bright. So our first, we work with 4 of the big companies out there, and one of them announced their dividend scale. So Sun Life announced their dividend scale for this year, locked in, good to go, 6.25%. So a jump from 6 to 6.25. We're seeing an increase over here in dividends. And typically when you see one, the others do tend to follow. We should get the information over the next few months. We'll be coming in on the other dividend rate announcements as well. But to start it off with 6.25, good job, Sun Life. Good job. I like that.
Yeah, and we like Sun Life, but again, there's really 4 companies we use, and the others kind of announce May, June, July areas. So let's wait to see how it all shakes down. And it's just 1 year, but it's an incredibly positive thing, and that coincides. Another one of our companies we use, Equitable. Equitable announced their earnings in the middle of February. And their earnings for 2022 were 156 million, a return on policy holders' equity of 12%. Now that's not going to translate into a 12% dividend. Don't get too excited, but it's the second highest profit they've ever made in their 100-year history. So again, Sun Life making money, Equitable making money. We've got Manu in Canada to come, but again, when one goes up, they tend to all go in that direction. So it's good times in the insurance industry because, again, we provide certainty, and in times of uncertainty, things get busier here because it's the perfect fit for uncertainty. Anything else going on in the industry?
No, that was great. That was big, Darren. Like that was huge. That was big. That was big. That was a big one. So nope, all good on the industry news, and we'll continue to announce as we hear more. Obviously, when we see these things come in, we'll make sure that we include those in their updates. Do you want to go back and just go through the podcast that we had come out last month? If you missed it, you're going to want to go back and check these out. We had RESPs versus infinite banking policies for children. That was a big one. That was a lot of questions coming in, on that. A lot of wow fact. People were, whoa, we're watching that. So if you got kids, definitely go back and check that one out. We also had Mortgages 101 with the Finley Mortgage team. So that was a great one. You sat down with those guys at the Finley group, talked about mortgages. So want to check that out. We had Cover Your Assets. And that was another big one. A lot of people commenting on insurances and asking if they had the right type. So we're certainly here to help you with that. And then we continued with the real estate podcast that we're putting out each month to kind of co-align with the book, Infinite Banking for Real Estate Investors. And we did Flipping Houses 101 last month. So some great podcasts to check out if you haven't already.
Yeah, and this upcoming month, you're in for a treat too. We got a couple really cool ones going out. We got Cherry Chan. She's a CPA, and she is a real estate focused accountant. So all of her clients are real estate investors, and it was just so nice to have Cherry on, who just knows everything about real estate investing. Should I incorporate? What about this new PREC in Ontario for real estate agents? What about the new flipping rules, the tax laws? Like, she's just wealth of information. So if you're a real estate investor, you got to listen to Cherry Chan. She'll be a guest coming up in the next couple of weeks. And then what else do we have coming up this month, Christina?
We got the joint venture podcast. So we're going to keep going with our real estate theme here. We're going to have that podcast on joint venture and how we can combine it with infinite banking. And another cool one that is going to get released is why you can't use universal life for infinite banking. We have a lot of people are like, I got a universal life policy. I have what we need. Unfortunately, it's not what you need. And we're going to tell you why. We're going to answer that question that a lot of people have. So that would be another, if you've got a universal life policy, that's a good one to tune into.
Yeah.
For sure.
Yeah, well, we get the question all the time. Can I use universal life for an infinite banking policy? And we're going to break it down and talk about the pros and the cons and give you our two cents take on it. Okay, so that's the upcoming podcast. So that's the March update. But the big news again, insurance industry is booming. Profits are going up. Dividend rates are going up on one carrier. Hopefully the other carriers are going to follow in a couple months. All positive on the whole life front, and a lot of uncertainty on all the other fronts. But that's it. Thanks for watching. Thanks for listening. Have a great day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.